Hello friends, Coastie Chris here. So the purpose of Coastie LLC is to help people enjoy life to the fullest. And I think that there's nothing better to do that than nature. But in order to be able to enjoy nature, something that can help you enjoy your life is financial independence. So here in America, what makes America the greatest country on earth is that we have the ability to create wealth as individuals that no other country has. And that's our stock market. The United States owns about half of the wealth of the world, and investing in the United States as an American it's an incredible luxury. And here you get to enjoy the fruits of that success that we've built over the last centuries here. So I want to help you make your dreams possible and enjoy life to the fullest. Get out there and enjoy nature, and to be able to do that, being financially independent and financially savvy is going to help you enjoy your life so much more. So a lot of videos and blogs and sources are out there on the internet to teach you how to be a good investor, but not a lot teach you those very first steps. So to become an investor, like what do you have to do? What's that very first step to become an investor? The very first step is committing to yourself that you are going to invest based off of facts and numbers. You're not going to invest based off of emotion. I don't care if you like Tesla or not. Is Tesla making you money? Are they being a good company to you as a shareholder? If not, I don't care. Like you have to follow the numbers and understand, commit to yourself before you get into investing that you're going to do it for the right reasons, and that you're going to be a responsible shareholder. That said, there's nothing wrong with finding a company that you love for the right reasons. If you love their products, they make good quality products, and you believe that at the moment people are undervaluing them, that nobody else sees what you see, that could be your next $1 million stock you stumbled upon. Tesla, again, is a great example. 5 years ago, they were undervalued for their potential in the world, and people that love that stock got into the stock and saw the value in that. They're now reaping the benefits. I've followed several different podcasts and blogs of people who've made millions off of Tesla. And they did that because they understood the company at a level that I didn't understand them at. But that's the very first step. Now, once you've had that internal dialogue with yourself and you've committed to being a responsible investor and not just chasing fantasies with your own hard-earned money, then you have two options to get into the stock market, broadly speaking. So your first option are going to be independent platforms like Webull or Robinhood or Acorns. Those are three very popular independent platforms for trading stocks. So you need to create an account on those, and there's all sorts of promotional material out there where you can get free stocks from Webull and free stocks from Robinhood. I highly recommend that. The next step is actually to go to your bank. If you bank with one of the major banks, like I bank with Bank of America, if you bank with Wells Fargo or JP Chase, they're going to have platforms for you to be able to trade stocks, because they don't want you to take money out of your JP Chase account and put it into Robinhood. They want you to keep it with their bank. So they're going to offer you a platform to be able to keep your money in the bank and trade your stocks. I highly recommend that as your first option. If you have one of those banks, Bank of America gives you a lot of incentives to keep your money with Bank of America. I'm now in some platinum elite level because I reached a certain point in my portfolio, and I kept it at Merrill Edge, who was a fantastic brokerage firm that Bank of America bought in 2008 when they were having trouble. So if you want to use Merrill Edge or Merrill Lynch, then I highly recommend that you have a Bank of America account and go ahead and open a brokerage account. So those are the two ways: either use an independent platform or use your bank. So now that you've had an internal dialogue with yourself, that you're committing to being a responsible investor, then you have a platform now, you have a brokerage account. What do? You're easily going to get overwhelmed with how many companies there are to invest in. Not only that, there's even more combinations of companies and mutual funds and ETFs and all this other terminology. You're going to get overwhelmed immediately, and don't feel bad about it. And if you know people who are investors and have been investing for years and they say they're not overwhelmed, they're lying. They're full of it. It's overwhelming because we have so many options to choose from, and then an infinite amount of money and other options that we can do. So when you first create your brokerage firm or brokerage account, if you can afford a firm, that's great too. But when you first create your brokerage account, promise yourself that until you are very experienced, you're not going to trade on margin, which means borrowing money from wherever you created your account from to buy more stuff. Don't do that. Don't do that right away. When you have more experience, maybe, but don't trade on margin, and don't trade options. Options are, I've never traded options, so perhaps I'm not the best authority on options. I know some people who've made them, but options are stressful because what they are is you have you're trading and you're sort of saying, okay, I think this stock is going to go down rather than up. That's an option. Or you say the stock is going to go up in a certain amount of time. And then if your time runs out, you lose your money. It's just complicated. It's too complicated than it needs to be. So don't trade margin. Don't trade options. Just own stocks and just outright buy stocks. And in fact, I'm not going to recommend that you buy stock in individual companies right away. So what I have found success in, and I do consider myself, for my age, to be a successful investor. Not the most successful, but I've been successful, knock on wood. What I recommend and what I did for my first half a decade, 5 years of investing, is I only picked 3 or 4, I think maybe 5 ETFs, exchange traded funds. What these are is it's similar to a mutual fund where you have a group of stocks that you're buying part into. You're buying a part of all of these stocks in the bundle. But the difference between a mutual fund and an ETF is that an ETF is going to have a lot less cost associated with it. It's going to cost you less to maintain it because it's following an exchange. Exchanges are like the S&P 500, which stand for the Standard & Poor 500, and it's the top 500 companies in the U.S. You have the Dow Jones Industrial Average, which is the top 100 sort of industrial manufacturing companies in the U.S. You have the NASDAQ, and those are they're like tech kind of newer companies, and that's an exchange. Computers all around the world are following those companies already. So what you're doing is tapping into their tracking of those companies, so you don't have to pay hardly anything, and because the computers are already there doing that anyways. So you say, okay, whenever those 500 companies together as one package, whenever they do well, I do well. Now you're buying into a boatload of diversity there right off the bat. If you buy into a Standard & Poor S&P 500 index fund, also known as an ETF, exchange traded fund, then you have instant diversification, and it's going to be very rare that all 500 companies do poorly. The last time that happened was in February, March, April of this year, and then they bounced back like crazy. So I'm not going to just put in some hypothetical theory of, oh, you should go into some Standard & Poor. I'm going to show you exactly the funds that I did. My first 3 funds, how well I've done on them so far. And I also want to put in a plug. I'm not a financial advisor, so this video is just for entertainment purposes. But I'm giving you genuine information as well. But I'm not a financial advisor, so just know that. So after I take a sip from my Coastie mug here, shameless plug, but go ahead and check out Teespring if you want some of the Coastie merchandise. I really appreciate it, and it shows your support for the community. And send me a picture with your Coastie swag. I'll put it on our Facebook page. So here I have 3 ETFs and mutual funds that you should invest in. I believe, my recommendation, because after 5 years or so, this is how well I've done on them. So PARMX is a Parnassus mid-cap fund, and I'll be going over in a later video what mid-cap, small cap, large cap, all that means. But it's basically, it's not huge companies, it's not small companies, it's somewhere in between. And it's a fund that follows those companies. And as you can see, I'm up almost 40%. And so if I had put in $100, now I'd have almost $140. And I've never lost money on it. And that's what I want to start this video series with, is something safe that you can hang your hat on, hang your coat on, and say, okay, if this loses money, it's going to be because World War III has started, or a pandemic has started, or something. And you're not going to be the only one, and everybody wants you to succeed. The whole world is going to be on your side if you invest in PRMX, because everybody wants those companies to succeed. Just like the other ones here, VFIAX. I'm up about 66% on it, and as well as VSMAX. So this is Vanguard 500 Index Fund, and then this is the Vanguard Small Cap Fund. If I had only one thing to choose in the whole stock market, I would choose this right here, VFIAX, Vanguard 500 Index Fund. That follows the top 500 companies in the US, and you will have, you have the whole world backing you. Not only the employees of that company are working for you, but the banks that insure those companies, and the foreign investors, and the government of the United States, and all our allies. They all want you to succeed, and they're working as hard as they can to make you money. That's people working for you. That's giving you financial independence and freedom. And what's great about these is you don't have to worry about it. Yes, you can make more money picking stocks, and we'll get into that. We'll get into how to pick stocks and which stocks are hot right now, and I'd be happy to go through that with you. I can talk all day about it. But these 3 here, you can put your money in there and forget about it. And what's great is on your phone, if you have the stock app, then you'll immediately know if you just pull it up and say, hey, the S&P 500 is up for the day, then I probably made money. You don't have to worry about finding the next greatest stock with these. This is where I put in my first, I think about $80,000. I put into these 3, and I slept easy at night. And so that's what I want for you all. I want you to succeed, and I want you to enjoy life. And having financial independence, allowing you to go and enjoy nature, is going to be one of the best ways that I know you can do that. So I hope you found this informative. If you did, please like, comment, subscribe, and let me know if you want to see more of these kinds of videos. I'm happy to do it, and I love investing and helping people enjoy life to the fullest. So I hope you have a great rest of your day, and Semper Paratus. Coastie Chris out.